Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we're more convinced than ever we're going to see a blow off top and then one of the bigger recessions we've ever seen, and we're going to show you why. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have a chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob, we got a couple of juicy charts, if you're a bear, that is. Why don't you take us into it? First up, we got this leading indicators index. What is that?
Well, the leading economic indicators are the activities in the economy that tend to lead the actual growth in GDP or economic activity. So those are important because those are more predictive of, what would happen with the stock market. And what we're seeing here on this first one is there is a rectangle that Bill put on the chart that shows every time the leading economic or the LEI goes down 14% from that baseline, is that it's basically guaranteed recession. And we're there again. And you can't have a stock market rising in a recession. So let's disabuse everybody of that notion. And, the inflation rate is outrunning economic activity already. So I would argue that we're quote unquote in a technical recession. But when you talk about a real recession, when unemployment starts to rise significantly, then people can't buy things. And they can't buy things. You can't manufacture revenue unless you want to go to jail, and that'll affect cash flow and affect the stock price. Now, in the meantime, though, that's why I said, you have to almost have cognitive dissonance here to trade right now, is that this next chart will blow you away. This is concentration of I think is it the top 10% of U.S. stocks, Phil? I can't read the chart.
Yeah, top concentration of top 10% of stocks by size versus the entire stock market.
Yeah, so we are now at levels that were obtained during the glorious period of 1928, 1929.
Yeah.
I don't know if I want to have that as my analog going into the next 10 years.
No.
And so what that's telling me is that as we get this blow off, and there's two really sections to the blow off, right? So there is a 2% move that it could have started yesterday, it could start today, start tomorrow into the week. And after the 4th of July, it's almost, I think it's like an 80% chance of a 2% plus move. I think that's going to happen. And, energy is already starting to move per seasonals. And then Bitcoin, we talked about that yesterday in our podcast. Our timing was perfect on that. It looks like that inventory is down low enough for people are going to start covering their shorts. And that'll give us a liquidity bump too. Now, July and August, we basically get seasonal tailwinds because you don't have people heavily trading. So volatility is going to get crushed. The risk assets are going to outperform. And in this election season, first year president election, fourth year, usually see us up to a 7% move between basically June into Labor Day. So I think, Phil, what we're seeing here is that, and the other thing too, I should have gave you this chart. NVDL, which is the 2X on NVIDIA, has seen record inflows this week. Record inflows. What that's telling me is that big money's pushing in to drive the indexes higher by lifting the number one traded stock out there. This stock is trading, this NVDL, a 2X leveraged ETF, is trading more shares than ExxonMobil, okay? So we know that that's a preamble for them to try to do a push here. And so the only thing I would tell you is all eyes on NVIDIA. NVIDIA had a blow off top, came down to support. Now we have to watch one of two things, Phil. If that we get a second high, that's a lower high, alarm bell should be going off in the market. So watch NVIDIA. If we're wrong this summer, it'll be because NVIDIA is failing, and then that should inform you as to basically the recession trade is upon us. Until then, NVIDIA is going to drive this market. Energy is going to get dragged along with it. Bitcoin's went through its supply surge. Now it's going to go into its supply shock environment. So now you have Bitcoin and energy running. I think Trade Genius, I think it's safe to say we're probably pretty heavily weighted in both those, Phil. and those are trades that we like a lot. And then going into the end of August, the market equal weight should fill in a little bit. And then after that, like I said, anywhere from Jackson Hole to Labor Day, you need to cash in your chips and get a little bit more defensive. What say you?
Yeah, the only thing I'll add to that is that we're also noticing more activity in the TLT ETF, right, which is the 20-year. And we're seeing big money starting to rotate into that. And we're seeing it on basically in size and in timing of the trades and frequency of the trades that you don't normally see. Usually that's not a very exciting ETF to watch because of the it doesn't have the kind of fanfare that you get with NVIDIA and things like that. However, it's going to be very important going forward because as we've been saying, your recession trade is going to be that rotation into bonds and you're going to get out of equities. So when you compare SPX to TLT, if you chart that ratio, you'll see that it'll start to take a nosedive. Hasn't done it yet, but that's something that we're going to keep an eye on it. We have evidence that the institutions are definitely starting to position for that trade. In the meantime, they will both more or less move together, but we're talking about where you get a big divergence where then TLT starts to take off and the SPX drops. So I think they're definitely getting in and getting positioned. But like you said, with NVIDIA, a lot of people are looking for a high. I think once you take this most recent high out, 'cause a lot of people think that, it's an engulfing high or whatever, and it's going to hold. But once you take that thing out, you're going to run into an environment where we basically push everything up into the first rate cut. And the first rate cut, if I were to guess, would be at the September meeting at this point. That's contingent on the job. So we'll also have to watch the unemployment rate between now and then as well. But let's just say that plays out that way. I wouldn't be surprised to see NVIDIA take out the highs, and then you're going to get into that scenario where when you're in a final leg on a push, a lot of times you'll see 2 or 3 breakaway gaps in a chart and things go really vertical really fast and people are going to FOMO and NVIDIA is going to be all over the headlines over the next couple of months. And so my lean is that we're going to have that kind of scenario and then it's Katie bar the door, because what comes next and most likely after the election in earnest will be the realities of what's going on under the hood and what's reflected in these charts we showed you guys today.
Yeah, and guys, look, we think we have a really good strategy for the fall, one that's a little bit more market neutral that can give you outsized gains. So come check us out, tradelikeagenius.com. Trade equities with us, trade crypto with us, get training. We'll teach you how to navigate these markets and at least get you on the right side of where we think the markets are going to be going. So with that, Phil, thank you. We'll be back with you guys tomorrow. tradelikeagenius.com. Enjoy the summer weather. Bye-bye.
Trade Genius.